Hi guys, thanks for tuning in to another episode of Nuggets News. Today we welcome a very special guest from Abra, and that's the CEO and founder, Bill. How you going?
It's going great. How are you today?
Pretty good, thanks. It's been following your work for a long time now, and I'm really excited to dive into how it all works, what you guys are doing, and your mission to sort of open up the markets for everyone. So for those that haven't followed Abra, how did it all get started, and I guess how has it sort of evolved?
Sure. So I started Abra to basically build effectively a new type of banking system where consumers could use cryptocurrencies. In some cases, they could know that they're using them. In some cases, they may not know. But it basically to replace traditional banks with cryptocurrency-based services to be able to do investing, move money around, get access to credits. Again, basically completely replace the existing banking system. I wanted a WhatsApp for money, right? If you think about it, every country in the world has their own kind of dedicated mobile money system, right? We talk about Venmo in the US, WePay in China, Paytm in India, M-Pesa in Kenya,
Yeah.
Transfer in Mexico, but there's no like one app to rule them all. And that also makes cross-border money transfer via any of those apps impossible because they only work in one country by definition, or they have to do business deals to connect each other, which means the number of deals you have to do is like n factorial, right? So it's crazy, right? And so one app that could work in every country could start to solve things like cross-border money transfer, cross-border payments, investing in Western assets in the East and Eastern assets in the West, et cetera, et cetera. So this is basically what we've built with the Abra service, right? So the first version of the app enables very simple investing, and then we're adding things like payments and money transfer and credit services over time.
And is it the focus more on STOs or equities, ETFs? Do you see like Forex being really popular, or going forward all
Yeah,
sorts of digital assets the same as everyone's getting excited about?
right. So we don't deal in anything related to STOs yet. I don't think there's a real market for that yet. I think there may be in the future.
Yeah.
So today the app supports foreign currencies and it supports 50 different fiat currencies that you can exchange, hold in any of the 50. It supports 30 cryptocurrencies, Bitcoin, Litecoin, Ether, Bitcoin Cash are all native currencies. And then the others do like investment exposure via our smart contract model
Yeah.
so that you can invest in all 80 assets, both crypto and fiat, and move between them. We just announced that we're adding US stocks and ETFs to that mix. So there'll be about 50 stocks and about 50 ETFs. And you can literally exchange between any of the cryptos and any of the stocks, any of the fiat currencies and any of the ETFs. So, for example, you can hold Australian dollars and buy Microsoft. You can sell your Microsoft and exchange it for Litecoin and any combination of those across the entire portfolio.
And that's
All use,
really breaking
yeah, it's
down the
all
barrier
based
to
on this.
entries.
Totally. Our mission is to democratize access to financial services globally. And this is a big step towards making that vision a reality.
Yeah, and in Australia, a lot of people lately we've been talking about uranium is the example we use, and there's no uranium ETF in Australia. And then if we want to open an account, we've got to find a US broker that will accept us, and then it costs you
Right.
a huge percentage in fees to transfer your money, all that sort of thing. So hopefully soon, if that's one of the ETFs, for example, someone will be able to have their Aussie dollars or Bitcoin, and just with a couple of clicks, get exposure to that ETF.
That's right. So this is the power of crypto and smart contracts, right? So you're not actually holding that uranium ETF in your example. I don't think uranium is one of the ones we're launching with, but we basically have synthesized the entire Nasdaq. So eventually we get to it, but you are not actually buying the ETF directly, and we're not holding it on your behalf. You're using a smart contract, to get price exposure to that ETF. And this makes it very easy for us to do two things. One, launch new synthetic assets very quickly. And two, make the service available globally equally quickly. Because all you're doing in some cases is just depositing Bitcoin or Litecoin or Ether into the Abra app and using that as collateral to the smart contract. and you just get the benefit of the underlying stock or ETF or fiat currency going up or down in value.
Syntheticized. I don't think I've heard that before, Bill, but I love that word.
I just made it up.
I'm going to have to start
Sorry,
to use that from now on. But can
I
we
have,
dive into that, how that works on the
sure,
back end,
sure.
from particularly that regulation, and are you buying these stocks and pooling them and then creating smart contracts? And if I buy that with Litecoin or Bitcoin, is that sort of getting hedged as well? Or how does that all
Yeah.
work?
So what you're describing would be more like tokenization, where somebody is managing assets on your behalf.
Yeah.
So Tether is more like a tokenized fiat currency. We don't do that at Abra. We don't actually create tokenized versions of existing assets. We create synthetic versions, and the difference is very important. In the case of these synthetic assets, you are actually holding collateral that's equal to the initial value of what you're buying or what you want to buy exposure to. So let's say Apple. Let's go with Apple shares as an example. If you want to buy $1,000 US, we'll stick with US dollars because in case of Apple, it moves in US dollars. So if you want to buy $1,000 of Apple shares, in this case, you would deposit $1,000 worth of Bitcoin or Litecoin or Ether into the Abra app, and then you would immediately enter into a smart contract into a position that would say if the price of Apple versus the US dollar versus Bitcoin goes up, the amount of Bitcoin that you're holding would go up. And if the price of Apple in that instance would go down, the amount of Bitcoin you're holding would go down. At the end of the smart contract, the Bitcoin collateral would be automatically adjusted so that you're holding the correct amount to reflect your winnings or losses on the Apple position. And this is a big breakthrough, right? It solves a lot of problems that I mentioned in terms of not having to hold stock on your behalf, not having to, we don't even hold the Bitcoin. So the Bitcoin that you're using as custody is entered into via what we call a multi-sig contract, so that you're actually holding your collateral and we're actually holding our collateral. And when you enter into the multi-sig contract, neither party is allowed to move the collateral outside of that multi-sig script.
Yeah.
And so, or wallet, I should say. And that also makes Abra very safe and secure because you can't hack Abra to steal your Bitcoin. We don't have it.
So in that example you gave, let's say that Apple has good earnings and it doubles overnight, and I've got $1,000 of Bitcoin in my wallet, and now theoretically, because I got exposure to Apple, where does that doubling of that money, like how are you guys getting exposure on the back end?
Right. So you are our counterparty to the contract, meaning you've basically said, I'm betting Apple is going to go up, right? And Abra has to be the counterparty, which means we're betting that Apple is going to go down. So we have to hedge away our risk to you so that if Apple does go up, you're guaranteed to be made whole in that smart contract. And so what we do is we run what we call a hedging operation, which is similar to what a hedge fund would do, working with a prime brokerage, for example. And that hedging operation basically takes whatever new position you create. So like, let's say you want to buy $1,000 worth of Apple, and hedges away our risk on that contract almost immediately, literally within a couple of minutes, if not sooner, depending upon what time of day you're doing it. You can only enter NASDAQ trades during, actually you can enter the trade 24/7, but it'll only be executed during NASDAQ's operating hours, of course. Yeah. And so the hedging wouldn't happen until the trade itself was executed on the smart contract side. But effectively, the consumer on paper is taking counterparty risk to Abra, but Abra hedges away that counterparty risk, and we show the consumer how we do it. I talk publicly on podcasts like this, and we have blog sites that explain it. And we want the consumer to understand that there's no risk to the consumer versus Abra's own balance sheet, meaning we simply hedge that risk away in the open markets. In trading terms, there's a phrase for this. It's a delta neutral system, which means if you take all of the consumer's positions and all of Abra's positions, they should balance out to basically be zero at large scale. And in most instances, they're like less than that balance. I have to report to my board every month, and that number is usually like less than $50,000, which is a round off error to zero versus tens of or hundreds of millions of dollars of contract positions.
Yeah, I think I finally have got my head around this. So you guys, because a lot of competitors are doing it differently, where they are trying to give you exposure on the back end to shares and tokenize them and do fractional ownership,
Right.
whereas you guys
Right.
are literally at that hedge fund, as you say. You are just hedging the positions, and that avoids a lot of the regulation and that sort of thing.
That's right. So the biggest advantage of the tokenized model is, of course, that it's one for one, right? I mean, if Tether does a proper accounting of their, I know that's a bad example since they've been in the press, but if Tether does a proper accounting of their fiat positions, there should be a one-to-one mapping of their balance of U.S. dollars versus the Tether float out there in the universe.
Yeah.
The other problem is that you're trusting some bank. And then you have legal issues around who gets to what jurisdictions does it work in? Are they allowed to issue ERC20 tokens without doing KYC? It becomes a legal hassle, right? Our model requires no third-party custody because the consumer is collateralizing the position directly using crypto. And then any hedging we do, that's Abra's own balance sheet. It's not assets being held on behalf of the consumer.
Yeah.
So it makes it very easy to launch this internationally.
Yeah. Don't go into details about Tether. Someone was saying the other day, if they deposit money into a bank, does that then become fractional ownership where they don't even have that money? But anyway, that's a can of worms.
Maybe it was a bad example, but you get the idea.
So any reason why you guys chose Bitcoin and Litecoin, or that's what a lot of it is hedging on in the background, but as you say, you can purchase with ETH or a number of cryptocurrencies?
Right. So even to be clear, if you use ETH or Bitcoin Cash as the deposit for collateral, that's actually converted to Bitcoin when you use it to enter into a contract.
Yeah.
Okay. So we also support Litecoin for the contracts, and honestly, the reason we did that was when we were testing this in December of last year, we got huge volume right away. I mean, we had people buying synthetic XRP, synthetic Ethereum Classic, and synthetic everything. Digibytes, lots of both synthetic cryptos as well as synthetic fiat positions. And our timing was, on the one hand, our timing was good because there was a lot of interest in what we were doing. But the mining fees spiked.
Yeah,
there was days where we were paying like $25 per transaction for our synthetic assets.
Yeah.
In some cases, people were only depositing $20 into the app, so it was crazy, right? It's not a very good business model. So we ported the contract system to have a toggle in our system so that individual contracts could support both Bitcoin or Litecoin, with the idea being that hopefully the mining fees on the Litecoin contracts would be lower. Now, fortunately for us, the mining fees came down precipitously throughout the spring and summer, and we don't have to use Litecoin. A very tiny percentage of our users are running Litecoin-based contracts. They don't even know it.
Yeah.
It's a small fraction, and honestly, we do that just to make sure that we know that everything's working correctly.
Yeah.
And it has been. We haven't missed a beat, and since we launched the system. And then eventually we will support other assets for the synthetic model. We'd like to support Ethereum-based smart contracts. And if the tech ever gets there, we look at EOS as well, but I don't think they're ready for what we're doing, or even XRP. Who knows? I mean, it's not something that we're looking at right now, but you never know. I think a multi-chain solution is probably the right approach for us over time.
So in theory, if Abra takes off and becomes really popular and it's doing huge volumes, does that put upwards pressure on the Bitcoin price as more of these contracts?
It has to.
Yeah.
It has to, because put it this way. According to my estimate, E-Trade is probably got $250 billion in assets under management, most of it in the U.S. and the U.K. and maybe Australia.
Yeah.
And if what we're doing works, you're talking about 5x the number of consumers in 100 different countries being able to buy exposure to the same assets. So you can quickly see where across China, India, Indonesia, Australia, Southeast Asia, the number gets to $250 billion very quickly. Well, there's not enough Bitcoin out there to collateralize all those assets. It's not even close. And so the only thing that can happen as a result is if everybody's trying to buy Bitcoin to collateralize their assets, the price is going to go up.
Yeah.
And I also think that Abra is not going to be the only company that tries to do this.
Yeah.
at scale. So it's going to be very interesting to see how buying Bitcoin to collateralize assets versus there may be a short market as well, meaning people making the opposite bets, which could also balance some of that out over time. But mostly we're focusing on the long positions right now. We're not really enabling shorting yet. So I think for the most part, it could have a very interesting effect on the Bitcoin price if this works.
Yeah, I think a number of companies are going to use Bitcoin as a backbone of some sorts, and it's going to have another reign where people see that, yeah, Bitcoin
Yep.
is really the
Yep.
king. The other thing that I wanted to flow by was this concept that I came up the other day when I was talking to the guys from DX Exchange, actually. And this is that in developing countries where their local currency has been treated so poorly, they now, for the first time, just through a smartphone, have the ability to say, well, I'm going to park my money in Bitcoin or Apple
Mm-hmm.
stock synthetically or whatever it is. But do you think this presents a real challenge to these governments and central banks to start to do better, because there's so many alternatives now, and it's so easy for someone in a developing country to park their money outside of that local system?
Yeah. Well, the irony is, I think a lot of banks are going to adopt this model in developing markets and in different parts of Asia because it gives them the ability to offer new services that they can't easily offer today, right? So since we announced the equity product for our international users, we've had a lot of inbound interest from banks saying, hey, can I use that synthetic asset model myself to offer exposure to NASDAQ, to do money transfer, to do applications that are either very expensive today and that I'm shut out of, that require correspondent banking network access that's problematic, for whatever reason. And so I find that very ironic, first of all. But I mean, banks are going to be under tremendous pressure to innovate or out innovate or even catch up to this new model at some point.
Yeah, fantastic. I guess, are there any countries where you aren't allowed to go, or what sort of percentage are we talking that it's already open to, and others you want to go to in the future?
Right. So we don't allow the app to function in OFAC sanctioned countries. These are the countries that the U.S. government sanctions for financial services. That would be places like Iran and North Korea, Sudan, places like that. I think Cuba is still sanctioned for that. And then for the equity product that we just announced, we're not launching that in the U.S. yet. We're working with our lawyers and government regulators to figure out a model for launching that in the U.S. So that'll launch pretty much everywhere else outside the U.S. Ironically, and then we'll backfill. But other than that, the Abra products are available and will be available everywhere.
Is it frustrating as someone in the US, and I've asked this question to a few people, just seeing that that's one of the hardest places, as you say, to launch? You can launch everywhere else apart from the US, and I mean, are they seeing themselves back? Is innovation already going elsewhere because of this?
I don't know. I mean, it's par for the course for dealing with the American markets. I'm used to it. I've been dealing with it for a long time. Whether or not you agree with the regulation, it is what it is, and we all have to follow the law or vote in people who will change the laws. I think there are some misunderstandings as it relates to crypto that I think the regulators here need to catch up on. I think there is maybe a lack of understanding that Bitcoin at its core is effectively a computer program that's literally creating other computer programs, right? So when you move Bitcoin around, you're actually creating a simple script with opcodes that signs a transaction on one side to send to a public key on another side. And if you look at the history of constitutional law in the U.S., it makes it very clear that those transactions are protected free speech. And that flies in the face of the idea of Bitcoin as a commodity, right? So the two don't reconcile very well. As a matter of fact, they don't reconcile at all. And so nobody, to my knowledge, has dealt with this, certainly at the federal level. There's some inklings that some folks in Wyoming with some of their new legislation get it, but the challenge there is that the federal rules are the rules that matter when it comes to things like securities and commodities laws and derivatives of those products. And so we'll see what happens over time, but ultimately this is going to end up in the courts. And I think the consumers will ultimately win insofar that there will be recognition that this is really a form of free speech and less so a form of new commodities. But until that day comes, we follow the same laws and rules as everyone else.
It's a really interesting concept that you've just floated there as well. Longer term, is there anything else that you've kind of touched on a couple of these things already, but where do you love to see the Abra app go, or is it more just the bottom billion that people talk about, where you want people saying, hey, check out this app, download it, you can send money to friends on your phone easily, and they can get exposure to Apple stocks and ETFs?
Yeah, I think the earlier example of having that WhatsApp for money, I want a single app that literally 7 billion people would be incentivized to use if they have a smartphone, whether it's to send money, make a simple investment, get credit in a pinch. But for me, it shouldn't matter whether it's you or I, or the poor farmer in the Philippines, or the banker in New York who wants to do a wire to their son in college in Europe. It should be that same experience, right? And that's what's happened with that kind of WhatsApp mentality, right? You literally have Mexican immigrants in the U.S. using WhatsApp to communicate back home because it's cheaper than text messaging, and you have rich bankers in New York communicating with their UK colleagues via WhatsApp. So I think we can do that now with money for the first time. Right, we have this expression in Silicon Valley venture that software is eating the world, but it hasn't for money, right? Banking and money aren't the same thing, right? So now, because I think Bitcoin and the decentralized model has the potential to kind of enable software to eat money for the first time, we can see visibility as to services like Abra becoming a reality.
You see financial services as the killer app for blockchain, or are there other things, applications that you're excited about? Any other projects?
I look at it in internet scale terms, right? So decentralization is very expensive, right? What is decentralization? Decentralization is eliminating trust, right? Eliminating trust comes at tremendous cost: computational power, electricity, inefficiency. Right, the Bitcoin blockchain is probably the most inefficient transaction processing system running on the planet today, not because it's trying to be efficient and is failing, because it's trying to solve the trust problem, which, as I said, is very expensive. So back to your question, if the problem you're trying to solve related to blockchain or whatever isn't eliminating trust or creating internet scale decentralization, then this is not a good place to focus your energy. And I would also posit that most problems don't require internet scale decentralization or the complete elimination of trust. So usually when I hear somebody say, hey, I'm doing enterprise blockchain this or that, my first question is why? What problem are you trying to solve, and for who? And why is it better to make the problem less efficient via blockchain as opposed to more efficient via an SQL database? Usually I don't get a good answer. So certainly, now long way of answering your question, I think when it comes to disintermediating centralized, trusted intermediaries in the monetary system, Bitcoin's model and the competing cryptos to Bitcoin, big thumbs up, solves big problems at the cost of efficiency, right? We all get that. I have not seen an analogous answer in any other industry yet that really excites me, or that makes a lot of sense to me, for all the reasons I just explained.
Interesting answer. Cool. Any final thoughts for people, Bill? I have really enjoyed that today, and we've done a couple of videos on the Abra app, guys, so I'll put the links in the description below, but any final thoughts?
No, look, we're trying to get the word out. We think that apps like these are changing the world, and we want to get as many people on board as possible. Give us feedback. We've got a referral program in the app that people should be using to get rewarded for their efforts. We've got a lot of cool new features coming down the pipe, very focused on our international user base right now, probably even less so than in the US. And so the timing of this discussion is fantastic.
Awesome. Thanks so much for joining us today, Bill. Good luck with it all, and I'm sure we'll have you back on the channel in future.
Thanks. I look forward to it.
Cool. Thanks, guys.